So welcome everyone to the Nefos Group podcast, where we unpack the world of finance, cryptocurrency, and all things business. And we're here to, as I say, unpack all things finance and crypto, and hopefully have a little bit of fun.
Welcome to the Nefos podcast, where we have another mini-series of all things crypto and taxation. I am Jamie Nuttall, the head of crypto tax for Miner, one of the top crypto accountancy firms within the UK. And today we are blessed with a good friend and a wonderful person, Michele from AndParters, who is based in Italy. Michele, how are you? And can you give us an intro to you?
Hi, Jamie. Thank you for inviting me and for a very nice presentation. Yes, I'm very fine. I'm an Italian tax attorney, and I work for AndParters, and which is a boutique tax law firm. And we are located in Milan and Rome, and now in Metaverse, the Central End. So you will find us even in Metaverse. So
Wow, I
it's
didn't know you had a metaverse office. That's news to me.
yes, really new. So yes, really new, and then we are going to see how it's going, and so to analyze all the crypto activities implications inside the metaverse, and we'll see. Yes, it's a discover for everybody. So yes.
I will definitely have to speak to you about this afterwards, see if we can rent out an office or something while we get our metaverse presence all in line. But no, Michele, great to have you again. Obviously, we had a podcast previously where we both met in London, which was wonderful. How is Milan, by the way? As you can probably tell, I'm wearing a hoodie because it's quite nippy here in the UK, and you seem to be quite comfortable in your suit.
Yeah, yes, it's not as cold as in UK. It's warmer, but even here in Milan is gray as in the UK. I can see in the pictures, so
Yeah, it
in the camera. So yes, everything is fine. Yes.
No, that's good. That's good to hear. Really, really pleased. But yeah, as always, happy to have you part of our podcast. Always enjoy it. It's interesting to see how other jurisdictions are going about it. And since I know the last time we spoke, there wasn't much going on in the crypto space per se. But from my notes, it does seem to be some progress made there. So I suppose, Michele, what's actually happening in Italy in terms of all things crypto? Like, what's going on with it?
Yeah, I'm glad to answer. Like here in Italy, we have a very complete regulation on crypto taxation, and this from January, unfortunately, just January 2023. So the Italian legislator tried to fill a regulatory gap, like in the crypto regulation. So providing some rules for individuals, some rules for the businesses, and then to try to resume the cryptos held by individuals in the past. So by paying, for example, a very short penalty, like it's like a voluntary disclosure procedure. So you say, okay, what you did not declare in the past, if you want to declare, I'm glad to collect and to see what you had in your wallets, and by paying a very small fine. And what is really clear that the Italian legislator wanted to define what is a crypto activity. So and where these rules fall in. So, for example, like let's go through like for the definition what we know and what we understand is that crypto activities are defined like a digital representation of value or rights that can be transferred or memorized electronically using distributed ledger technology or similar technology. So as you can see, is really vast definition. So what was the aim of the Italian legislator was to let fall in all types of crypto activities. And in now we don't refer to cryptocurrencies, but of course, to crypto activities.
Good. I like that.
So to let provided like all types of crypto activities. So you will have, of course, the cryptocurrencies, the NFT, all types of tokens, and so on. And if you have some confidence with these definitions, is even in line with the definition provided by EU regulation, like the MiCA. It is the regulation from EU for crypto activities that will go in force in the following weeks, on the following months. So Italy is comply with the EU definition, but the difference is that in the EU definition and in the EU regulation, does not apply to NFT, for example, non-fungible tokens. While here in Italy, the definition will apply also to non-fungible tokens.
That's good though. So that's just to give the listeners a bit of background. So previously we've covered how to emigrate to Italy and the tax sort of consequences and positive notions and all that. Now, as you're probably aware, this is a Nephos group, but a large proportion of the business is Minor, which is a crypto-only accountancy firm. So I suppose for our listeners who are tuning and thinking, oh, it might not be relevant for me, it's still interesting to know how other jurisdictions are doing it, especially if you're thinking about moving to Italy and you have crypto assets, because then I need to listen to this as well as the other mini series we had with you to understand how it all goes about, to the point where I would even contemplate moving if I could. But I don't think the boss would be best pleased if I moved out the country.
I don't think so.
No, I don't think so either. But no, it's good that they've got a definition for crypto assets as a whole, as they say, because it's quite a wide spectrum. Because within the crypto space, like you said, we've got the digital assets itself, but what about all the different assets in the metaverse? Clothing, avatars. Is it a game? Is it gambling? Is it a hobby? How does it all? And I don't think we have the answers right now for all of those, but we are getting there by the sounds of it on an international macro scale, which is wonderful for Italy, the UK, and everywhere else by the sounds of it. So, um, in terms of the definition, it seems like we're quite happy on what is within the scope of a crypto asset. So, how would you determine the capital gains tax from an Italian perspective? How would you? So, in the UK, for example, it's very unlikely for it to be outside the scope of capital gains tax. Very unlikely. So, how would you determine that in Italy?
Well, before answering you the how to determine, I would like to do a premise,
Yeah,
because
sure.
it's really important to understand this point, because the Italian legislator provided the rule on when there is a tax relevance in exchange of crypto activities, and it says that if you have crypto activities having equal characteristics and functions, this exchange is not relevant for tax purposes.
Okay.
If you have crypto activities having different characteristics and functions, are relevant for tax purposes. Now, let's do I would like to be much clearer in this point. The
Please, because it sounds
definition
interesting.
the definition is not so good. I have to premise, because characteristics and functions, we know that crypto assets and crypto activities have, for their nature, different characteristics and functions. So how could you compare to an apple with a pear? I mean,
Yeah,
like uh, it's just a fruit, but it's not, one is an apple, one is a pear.
absolutely. Yeah.
Okay, but what I'd like, maybe what was the aim of the legislator was to focus on the functions, not much more on the characteristics. Because if I intend a crypto activity as a means of payment, so let's say a cryptocurrency, so an exchange of cryptocurrency, I have an exchange of a crypto activity having equal characteristics and functions, so not relevant for tax purposes.
Right, Michele, now that is very, very interesting. So you're telling me, for an example, if I had, say, Ethereum, and I were to make a swap for all my Ethereum to an equal amount of Cardano, let's say, you're telling me that that is not a taxable event,
If
okay?
it has the same functions, because of course, if you appoint a different function to that crypto currency, so you said Cardano or Ethereum,
Yeah.
of course, if there are different functions that you are uh, appointing to that cryptocurrency, of course, there is a taxable event. But it's like we exchange, I don't know, euros with euros. I mean, it is a means of payment. Okay.
So if my function for Ethereum is just to invest and wait for capital growth, and then 6 months later I swap it for Cardano because I think, oh, that's going to go, parabolic, and I just want to swap that over, and the function is the same. I just want to keep it for capital growth. It's like, again, it's very hard to say categorically right now in that scenario because there's plenty of other issues around it. But in that simple scenario, it does sound like there wouldn't be a taxable event.
If you convert in another cryptos, no. But if you convert in, for example, in fiat, of course, yes.
See, now the reason why I want to highlight this to our listeners, Michele, is because that is not how it works in the UK, and that's how people think it works in the UK, but it's categorically not at the moment. So it's interesting to see how Italy are taking this particular approach because it's it seems logical. It seems very I want to say
A look-through
plain.
approach, where maybe we can say
Yeah.
look-through approach. So which is the characteristics? So why do you hold this stuff?
It looks at the reason for your, like you said, your the function for the asset within your portfolio as opposed to the asset itself. So it's which is really odd because the UK has a framework. Okay, America, as you may or may not know, has Sarbanes-Oxley, which is a very rules. This is exactly how you do it. Whereas UK has a reporting framework where it goes, as long as it's within the realms of this, it's fine. So I would have thought, given these two definitions, the UK would have gone for what the Italians have done, but it seems to be the opposite. We've gone no, because in the UK, whether you know or not, Michele, any disposal on any crypto is a taxable event every single time. Ethereum to Cardano, Cardano to Bitcoin, Bitcoin for an NFT, NFTs for fiat. It doesn't matter. That's all a taxable event. Even stablecoin, and I don't want to talk about that today, having heard what happened at the weekend. But even a stablecoin to fiat, technically speaking, is a taxable event. So it's interesting to see your
Yes,
definition is different.
yes, you anticipate a topic, like, because in the here is the general framework, say in theory and theoretically, like the change between crypto activity, it is having equal characteristics and functions are not relevant for tax purposes. But now, when we are going to see how to determine capital gains, you will see that even the holdings of crypto activities is a taxable event.
Okay, so it's not
So,
all good news.
okay, yes. So I'm trying to. So, but it's a good, like, you anticipate the topic, so we can go through there. But this is a general rule. But you see, there are, like, in the definitions and the rules provided by Italian legislator, there are words and then concepts that maybe are not really fit, does not really fit with maybe the general framework of blockchain and general framework of crypto activities. But it's the first step. So we are really happy to have, like, a legislation and new rules on these topics, and so is improving. So it's time. It could be time to amend some part of the law and get better. So, but it's the first step. So it's good.
So talk to us, Michele. So how do we determine the capital gains of crypto assets and the trading of and whatnot?
Yes. So how determine is that capital gains as realized through the reimburse, supply for consideration, exchange or barter, or holdings of crypto activities. so will be subject to the 26% rate. But how do we determine the capital gain? So there are different rules in relation to the different topics. So like in a general overview, general aspect, what we have to refer to the difference between the amount received, or in a barter transaction, we refer to the fair value. It's really general concept, but we have to determine what is the fair value.
Yep.
And then the cost or the purchase value. So the difference between these values determine the taxable amount to be taxed to at 26%.
So very similar to the UK by the sounds of it then, where we take the market value less the, not necessarily the market value, but the sale proceeds, if you like,
Yes, market value. Yes, fair value market. Yes, yes,
less the base cost, is your gain, right?
yes.
Easy.
Yeah,
Michele,
it's
this is
easy.
easy.
It's easy. It's the same.
Easy. And then is it straight up 26%? Do you have a tiered section? Do you have any tax-free amounts?
Yes, we have free amount of 2,000 euros. So
Okay.
there is a threshold of 2,000 euros. So above, you apply these rules that we discussed before.
Yep.
And then there is even a rule for offset. So the capital gains with the capital losses. So you can offset these two parts. And there is a specific rule that is really interesting, that if the capital losses are more than capital gains, the surplus can be deducted from capital gains in 4 period time. So for 4 period time, you can put on forward and go to try to deduct from the capital gains.
So after the fourth period, so the fourth tax year, I presume, on the fifth
Yes,
one, you lose it. It's gone
yes.
forever.
I
See,
I
that's
mean,
interesting.
this has to be clarified, I think, because from the tax authority, this part maybe some clarification could arrive. But
Yeah,
for
definitely.
now, the law provides that you can offset until the 4th period time.
So again, just for a comparison, I guess, for our listeners who would more than likely be those in both UK and Italian tax regime, perhaps moving from one to the other. In the UK, as long as you make a claim for the losses, you can claim it indefinitely, forever. Those losses are there forever. The 4-year rule for us is that if you make a loss, you have 4 years to make the claim for the loss to keep it forever, if that makes sense.
Okay.
Whereas you have a 4 years where you can only use it. Do you have to claim it, or can you just, if you don't need to do a tax return, can you just leave the loss there and then 3 years later do your tax return and go, right, now I've got profits to actually put down? Can you use those losses, or do you have to make the claim? Do you know? Is it?
Maybe on this particular aspect would be like more studying on that, like even
Yeah.
from the tax authority, what
Yeah, that's fine. It's
yeah,
all new, so of course that's
yeah.
the case. And then is it a flat? Is it a flat? You said flat rate, 26% on capital gains. There's no tiered section, higher, lower, anything like that.
No, 26 and stop with a
Easy,
fraction.
Michele. This
It's
is
easy.
easy. I'm gonna
Not
move
not
to Italy. I'm gonna learn about your tax law. No, I'm joking.
no, no.
I'm sure it's a lot more complicated than that. No, that's good. So, obviously, as we discussed this morning, we're trying to keep the podcast as succinct as possible. It's honestly the amount of information we've got from you. We probably need to do another one to get the other side of all of it and go into much more detail.
Yes.
But for the sake of our listeners, from an individual perspective, just to recap, we're saying that with crypto assets, unless there's a change in function, it is not a taxable event. When there is a taxable event, you get 2,000 euros tax free, and then it's 26% flat rate tax on anything above that. That's fine, that's wonderful. And I presume that £2,000 is per person, per individual. So there might be some husband-wife tax planning there, opportunities for those in Italy. So can we move on to businesses and companies and traders? Does it change anything from that respect? Because it does in the UK.
Yes, yes, a little bit changed. But if I may, like I would like to tell you something about the determination even to the cost. like
Yeah,
for
sure, definitely.
because I think this few consideration may interest our listener. So because the Italian legislator says that okay, we said that the capital gains, you determine the capital gains with the difference between the amount received and the cost,
Yep.
essentially. Okay, but the cost, you have to give evidence of the cost. And if you are not able to give evidence of the cost by specific documents, the cost will be zero. So the
Oh,
capital gain
wow.
will be applied, so the 26% will be applied or over the amount received. So this is why the consideration I would like to make with you.
Yeah, it's quite
Like,
important by the sounds of it.
yes, first, like when we deal with crypto activities, you know that we can face essentially on-chain transactions and off-chain transactions. So on-chain transactions, for example, decentralized blockchain, and from what I know, it's not possible to give evidence of documents released from third parties. I mean, it's not a traditional system.
Yeah, it doesn't seem feasible.
Exactly. So there is not a time when the transaction is carried out, but only a time when the transaction is registered, right? So with a specific timing to determine the cost from the external is not possible. So this is a provocatory like consideration because
It,
you
it's not
see,
easy anymore, Michele. I take it all back. It's not easy at all. So, is there a way to separate the differences between capital gains and then business valuations of crypto activities or anything like that? What's the
yes,
difference?
a lot of for businesses, yes, we have a kind of different approach. For the Italian legislator that provides specific rules on valuation of crypto activities. And so says that what you valuate, like for in your, I imagine in your balance sheet, uh, is not relevant for tax purposes. Only when you trade, only when you exchange, only when you convert, it makes a taxable event for businesses.
Okay,
And then
okay.
applies the general rules for businesses. So, for example, you will apply the income, the income with the ordinary rules
Yeah.
of Italian rules.
What
So
what is the what is the income tax on businesses in Italy? I have
24,
no idea.
24,
Okay, so you save a little bit in tax.
yes. So
That's good.
24, so but so you have to calculate all the income with all specifics rules, and then you come to that rate. But what is important is that because was not in the past as this is, so now the crypto activities, if you evaluate the crypto activities and you don't convert, and you don't any exchange, it's not a taxable event. It's not taxable.
So just going back to one of your points, which I think I've completely skimmed over, unfortunately. So you're saying the difference between the individual and the business is that anything on the balance sheet on the business is not taxable until there's an exchange of some kind, a disposal of the asset.
Exactly.
So that's how it works in the UK for individuals and businesses. Now, I remember you saying not too long ago that there was a situation where even if you don't trade, you could be taxed as an individual. Could you explain what? Because to me that's completely bizarre and weird, but perhaps your explanation can help. How does that work? Why?
Yes, this is like a good question, and maybe like more clarification even from the tax authority like will come
Yeah.
because uh, what the actually the main part of these new rules are focused on individuals, and then for the businesses are dedicated like one rule, so only the valuation. And so now, like in Italy, we are discussing and we are trying to understand, like even in this situation, you just tell us how it's going, like because it makes sense your question. But we
So
have to
it's
see.
a bit too early to tell, is what we're saying,
Yes,
really.
yes.
But to speculate again, just from my sort of knowledge and experience, do you think I won't hold you to it. This is just an open discussion with Kelly, because I think that it could be a case of looking at the balance at the year end, having some form of revaluation of the cost, sorry, of the market value, the fair value of it, and any increase or decrease in value at that point could, in certain situations, be either a loss or a gain. Does that sound about the sort of direction it's going to go into?
Can you repeat? Sorry, I got lost.
That's fine. I did go on a bit. So what I'm saying is, say you hold X amount of crypto tokens and coins in your portfolio as an individual, then at your tax year end, you would look at the value of it at that point at the year end, and there could be a taxable moment then. Is that what we're saying? At that point, you could go, oh, actually, it's valued at this now. It was valued a lot less before. Therefore, we have to change the base costs or, to match it at the year end and create a loss or gain. Is that how it works? Again, speculation.
Well, from my understanding of this law, is that you just make the valuation. So at the end of the year, so what does it what how does it works? But if you don't trade, so you don't said convert an exchange or something else, it's not a relevant, it's not a taxable event. So if you have it in your balance sheet and you have balance all the cryptos activities and remains in the company, in the business, so it doesn't, you don't use them like to do anything and just hold in the business. From my understanding of this on this law is that it's not relevant. So because it's just an asset that you have in your company, and so like maybe I don't know, immobilized. I don't know if might make sense.
Yeah, I know what you mean. I think, yeah, so it depends on the actual, again, function of the asset itself.
Yes.
What you're using asset for? Are you using it as stock? Are you using it as some other sort of asset class? Which again, the options are endless, I suppose. It's really interesting to see how it's all. It seems similar in most situations, but there's a few differences between the regimes. Again, is that good? Is that bad that we've got different sort of taxation legislation around it all? I mean, I think we're always going to have that. We always are around the world. Doesn't matter what you're taxed at. Um, Crypto, because it's so international, it's a lot more international than anything else. There's no real substance in any particular country from a UK perspective. Now, having said that, I remember us having a similar topic before, and it was all around the geographical location of the crypto assets itself. Like I said, in the UK, it depends on where the individual is. So if I'm in the UK, doesn't matter where my crypto assets are technically held on a server or whatever it might be, it's going to be considered to be in the UK. Is that different for Italy? Does it matter if it's an exchange in the US, for example, rather than a ledger at home in your drawer?
From my understanding, it's quite similar. Like even in Italy, it makes like because then you apply if you say the general rules like for individuals, and is what may vary maybe is like a flagging or for tax return purposes. So you are declaring like if that you are holding crypto activities like your wallets, and if you are holding in exchanger or in your private wallet. So this may vary. But this administrative a burden, like we say.
I see, I see. Okay, so it sounds like we're coming closer and closer together in a sort of similar fashion. Because let's be honest, we could talk next year, Michele, and everything will change.
Yes,
Everything.
for sure. But I would like to maybe would be really interesting like to do another like podcast like because I'm really sure that in a few weeks or in a few months will come like an explanation from the tax authority. So we'll go through much deeper in some aspects. And so maybe from this first consideration on these first laws provided by Italian legislator, we can go through much more deeper and maybe make some focuses like on certain topics. And so
Yeah, Michele, look, if it was up to me, I'd talk to you all day long about tax. I know it's so nerdy, but I'm more than happy to talk about tax, especially when it's around the crypto space. So yeah, absolutely. You are on record saying that you'd like to turn up again, so
yes.
you can't wiggle out of this. No, it'd be great. What yeah, so we'll definitely have to put something else in for when we get a bit more information and we can sort of dissect that together, if you like, come with ideas and whatnot, and just have a look. And as two sort of crypto tax professionals, we can really dissect it and see what the differences are with the UK and have different angles and whatnot. So um, let's wrap up this particular session anyway. We've got good fundamental, basic, ground level foundation understanding of it all, which is wonderful. It's really useful, especially for those who are looking to move to Italy or are already in the Italian tax regime. So, Michele, could you just sort of summarize in a few sentences, in the most simplest of ways, what we've discussed in terms of the taxation around crypto for individuals and businesses?
Yes, of course. So we have said that we have like a definition, like a vast definition of crypto activities, and which entails that for individuals a taxation of capital gains of at the rate of 26%. And for business, like for businesses, we have only evaluation of crypto activities in the balance sheet of the company, and then only at the exchange session when there is an exchange of the crypto activities, there will be a taxable event. And I think these are the main two things that we have discussed in really summarized way.
No, that's good. That's good. I know it's always, like I said, Michele, it's always a pleasure having you on. Um, and I have no doubt in my mind, once we get a bit more information, because this is still a juvenile guidance and legislation, isn't it? It's nothing. It's nothing that's been built from it. It's like the foundations of it, or isn't? Is it not?
Actually, is in force. So it's a first legislation. So it came in force of 1st January 2023.
Oh wow! So only a couple of months old.
Yes, a couple of months old, and now there will be the practical laws, so the implementing laws of this general law, so provided by the tax authority. So
And this will be built on going
yes,
forward.
exactly.
Bit more information. And hopefully we can catch up continuously, try and give everyone an update on what's happening from their end, which sounds wonderful. So anyway, thank you very much, Michele, again for coming on from AndPartners Italy. You haven't flown in this time, but you have certainly made the effort to turn up online with me once more to talk about these wonderful crypto taxes. Anything you'd like to say to our listeners before we sign off today?
But thank you for listen us, and then if you have any further questions, or if you have any points that we can discuss, we are happy to help you, and we discuss together. So just join us.
Wonderful. If you are listening and you want to get hold of Michele and his wonderful, wonderful crypto tax brain all the way in Italy, drop us an email, message, whatever you like, and I'll certainly make sure that you are in touch with him. So, yeah, thanks again, Michele. Today has been about crypto taxation in Italy and the regimes. Very easy, I thought at one point. Turns out not so much, which is why we have people like Michele on board to try and help us with these discussions. So, I'm Jamie from Nephos Accountancy Group, part of Minor. And this is Michele from AndPartners. We hope you had a wonderful time and we will speak to you soon. Thank you and goodbye.
Bye.